Hi, this is Dave Seymour. You might recognize me from the hit TV show Flippin' Boston. Super excited to be on this show. Real Estate Investor Conference right around the corner. On the show, we're going to share all of the tips and tricks and techniques that I've used in my career to take me from fix and flip to TV to fund management. See you there.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Get ready for the Midwest Real Estate Investor Conference in Grand Rapids, Michigan. Join hundreds of real estate investors for networking, learning, and growth. Be sure to mark your calendars for April 24th and 25th of 2025. Hello and welcome to episode 485. Not everyone goes from fighting fires to building a $350 million private equity fund, but today's guest did just that. Dave Seymour started his career as a firefighter, but during the last market crash, he pivoted into real estate investing, quickly becoming an expert in commercial multifamily and ground-up development. His no-nonsense approach and deep industry expertise even landed him a starring role on A&E's hit show Flipping Boston, along with features on CBS, ABC, CNBC, and Fox News. Dave has guided everyone from first-time investors to major institutions through complex real estate deals. And today, he's here to share his strategies for building wealth, navigating market cycles, and scaling a real estate business. Dave, welcome to the show.
Brian, thanks for having me, man. I appreciate it. Every time somebody introduces me like that and they read the bio or the achievements, I'm constantly looking over my shoulder, like who's that guy talking about? It's been a heck of a journey, that's for sure. So thanks for having me on the show, brother.
Well, you're welcome, and it's certainly an intriguing bio. And I want to start with the fact that you started off as a firefighter. I mean, that's a very great profession to be in. I mean, helping a lot of people, and now you've made this transition to real estate, investing and the fund that you have. I mean, two completely different worlds. How'd you make that transition?
You know what? I'll push back a little. They're not that different. So, I'll unpack it a little bit for you as best I can. I came from a very blue-collar background in England. I was born in London. I emigrated in 1986. I was just a young guy in my early 20s. And the reason that I put the context in place is because coming from that blue-collar background, I brought with me a lot of norms, a lot of consistencies that were not beneficial for wealth creation, were not beneficial for a real estate investment business, right? I was told very early on to trade time for money. That was the concept. If you wanted to earn more money, then you would trade more time. And coming from that blue-collar background and then stepping into the great country of the United States and becoming a citizen and a proud member of the country, by the way. I don't regret my British heritage, but man, I'm proud to be American. But, with the American culture came this wonderful concept that you could spend more money than you earned. And I'm like, that's pretty cool, because I had no financial literacy. You see what I'm saying? I didn't know I knew how to spend money. I didn't know how to make money or grow money. And a friend of mine said to me one time, so I've got this as a base to work from. And a friend of mine said to me one time, he said, why don't you try and get one of those good government jobs, Dave? I'm like, oh, that sounds exciting. What's that? He goes, a police, firefighter, postal worker, I don't know, work for the electric company or something, one of those big corporations. He said, it's a solid deal, great job, benefits, you're done and dusted, life's going to be perfect. And I'm like, I'm in like Flynn, I like that. And what I did was I tested for the fire department and I tested very, very well. And then I found myself in this career that I adored. And the reason that I say, Brian, that the real estate investment world and fund world is not that different from the fire service is because in the fire department, I learned some fundamental truths. You do not do it on your own. You learn, you repeat, you learn, you repeat. You're always going through these cycles of repetition for proficiency, right? In the medical world, I became a paramedic while I was in the fire department. In the medical world, they don't just give you a drug bag, with some really hardcore drugs in it and say, get out there and just give some people some drugs. It's going to be a good day. They don't just say, here's a tube, stick it in somebody who's not breathing. There are systems. Systems are designed to save yourself time, money, energy, and stress. Systems. That's what they're for. So while in the fire service, I was great at what I did and I loved what I did, but I still had this financial illiteracy piece. So being a firefighter, most firefighters have second jobs. It's usually in the construction world. And that's where I got my taste for sticks and bricks. And I found out very quickly I was great at digging ditches. I wasn't great at fine carpentry. Do not ask me to cut a mitre. Do not ask me to coat a coping mechanism around a crown molded. Don't ask me to do any of those things, because I'm terrible at it. But what I did find out was I was pretty good at communicating with home sellers, communicating with other construction guys. Built a little business in construction and it did okay. But the market crash occurred and I realized that where I was in life was not going to give me any movement up. I needed the next level, whatever that was. And I remember I'd been on one of my construction jobs. I was working for somebody else, actually. I remember it like it was yesterday. It was in January here in Boston, where I'm situated. And you guys know the cold. You're in the Midwest, right? We don't have the market cornered on snow and cold. But it's January in Boston, Brian, and I'm trying to dig down to a frost line because I got to put in a deck and I got to make a buck. And while I'm doing that, this car pulled up. It was a very nice car. And 3 people got out, beautiful young lady and 2 gentlemen, all well-dressed. They had the big fancy parkas on, the big warm coats, and they're sipping a latte and they're clean and they're smiling. And I said to one of the guys on the job, who's that? And he said, those are the investors. That was the first time I'd heard about an investor. He said, they find the money, they find the deals, they put it together, we fix the houses, they make the big bucks. So I sidle over the way that I do. Hey, how you doing? Smiley Dave. And I start asking questions. And to be frank with you, my friend, they weren't that smart, but they did know some things that I didn't. And that planted a seed for me. And then as the market began to crash and correct, there was a commercial that came on the radio in my truck. And I was losing my house. It was a dark time. The radio commercial comes on, and it was, "Teach Me Foreclosure, a free 1.5-hour seminar coming to your neck of the woods." And it was a seminar for real estate investing. I'm like, I remember that. Seeds had been planted, a path was finding its way. And that's where it all started, man. I became a real estate investor through the education forum of a company that no longer exists today.
Which company was it?
It was Whitney. It was Russ Whitney. I spoke at the Real Estate Investment Group out there in Grand Rapids many, many years ago, the local RIA group. And the journey began, but it was education, then implementing the education. It's great to learn something, but it doesn't mean a darn thing if you don't implement it, right?
Tell us about implementing it. What did you learn, and how did you make that first step into the real estate investment?
So I make that parallel with the fire department, right? You can do all the training you want as a firefighter, but if you don't go into the burning building, you're not going to put the fire out. So I brought that with me into my real estate career. And it was a case of not only investing the dollars into my education, but it was also implementing what I learned. So making offers during the crash was an interesting time, because the banks were bringing all of these foreclosed properties onto their books. They didn't have the systems in place to manage them. They didn't understand what an REO was. People didn't understand what loan modifications were. If you had any of that discussion back then, the market was full of ignorance. And within that ignorance came the opportunity. So I very quickly became known as one of the distressed asset investors in my market, one of the better ones. I learned to allocate capital in deals. There's always money in a market, always. You just got to understand what that money is looking for. Is it looking for longevity? Is it looking for a spike in interest rate? Is it a short-term loan? Is it how does that money want to go to work? And if you can find that money and allocate it to the strategy that you're working, it creates success. And there were investors who were were bending over backwards for 10, 12, 14% cash on cash return on their capital secured by a single family home that was going to go through a rehab process. And you got to remember, when we short sale a single family home, we are way, way below, market value.
To put this in context, this is after the Great Recession, like once the bubble kind of burst in 2008, 2009. Because one of the things that I noticed during that, because that's when I really started investing heavily, but one of the things I noticed was that there was a lack of capital, but somehow you were able to find those investors who wanted to invest with you. What was that like?
So that was relationship driven. And we talk about this so many times as real estate investors. Your reputation and the relationships that you garner along the way are everything. Like, I had enough local mentors, we'll call them, in the marketplace who knew me as a firefighter. They knew me as a good guy. You know what I mean? Like, Dave's a good guy. He's a firefighter. He's fun. He's a good guy. He works construction. He knows some stuff, right? But when I've got enough education behind me to show before and after what I can do with the capital, how I'm going to allocate that capital, and how I can show what the market value of an asset will be afterwards based on comparable sales. And let's be honest, sales were not good. But there were still buyers in the marketplace. Retail buyers were still looking for homes. So when I was able to package that up properly, I could go to the mentors. I could go to the larger construction companies. I could go to some of the attorneys. There were still doctors and lawyers, and dentists and chiropractors who were still doing business, who needed an opportunity to put capital to work. And being able to make a clear and concise presentation of what money will do, how it will work, when it will come back, and when it will come back with friends, I used to call it. We're going to send you money out, it's going to come back with some friends, meaning interest. When you're able to have those common sense, just poor understanding of what the investment was, money seemed to come towards it. It wasn't a lot of work. Now, you got to understand also, I'm probably only doing 3 to 5 single family properties every quarter, every 6 weeks. So you don't need a huge amount of investors. But as that began to ramp up, it would get some traction behind it. And once that momentum started, it was very, very hard to stop it. So how do I find them? Good communication, establish relationships, over under deliver, over commit and under deliver, or whatever the saying is. You know what I mean?
Under promise and over deliver. Were you just borrowing money, Adam, from your investors at 14%, or were you doing like an equity joint venture with them?
No, it was straight up. They were straight up first position bank. They would do the acquisition and the construction on a draw schedule. So they understood what their position was in there. Look, if I could bring some capital, this was early in my career when there was no money in my bank account. So, I wasn't able to bring some deals. I did 50-50 partnerships. One deal I did a 70-30 partnership. I gave them all the juice, if you will. But that buys you good favor going forward. And then you got to learn how to negotiate yourself back into your own deals. They think that's the way every deal is going to be.
What did you learn about negotiating a good deal for yourself? I mean, I'm sure at 70-30, maybe you gave away too much. I mean, what did you find the right combination to be?
Early in the career, you're giving away more because you've got less to put into the transaction. I got sick and tired of hearing greedy people say the gold makes the rules. He who has the gold makes the rules. And I learned along the way that that's great that you got the gold, but if there's nowhere to put it, then it doesn't matter. Money is like manure. If you spread it around, things grow. If you keep it in a big pile, it stinks, right? So, I learned the negotiating techniques based off of what my needs were at any one specific time. When I first started, obviously my overhead was a lot lower than it is today. So I found that if I could put myself in the position of the person on the other side of the table and primarily fulfill their need. We all know when somebody's being greedy. We don't spend a lot of time around those people. But if you ask the right questions and if you can probe enough to find out exactly what their aim is, then the magic words are this: what if? 2 powerful words, man, in negotiation. What if? What if I could get you a 12% return on your capital secured by real estate with a note, same way as you would secure it as a bank, 12 to 18 months, monthly payments on that money coming in. And, we put you in first lien position. We'll execute, make a beautiful home. and we'll get you out in as short a period of time as we possibly can. Now, if I could do that, would that be something that would be interesting to you? If I could do that, right? So there's so much neuro-linguistics, involved in that stuff, but it becomes second nature the more that you do it. So let them win is my philosophy with that stuff.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Save the date for the Midwest Real Estate Investor Conference happening April 24th and 25th of 2025 in Grand Rapids, Michigan. This event is the perfect place to connect with fellow real estate investors, gain valuable insights, and elevate your real estate game. With a lineup of expert speakers and numerous networking opportunities, you won't want to miss it. You just shared a lot of very powerful negotiation techniques, and you brought up neuro-linguistic, NLP. So, yeah, coming from being a fireman to understanding these negotiation tactics, that's a totally other skill aside from the real estate. How did you start learning about the negotiation tactics?
To be corralled, I'll use that word, corralled back to where all of this came from. It's really interesting to go back in time to be able to answer that truthfully. And I have to say, the abilities that I have today have been a gift of two things. One, my willingness to learn, and two, me being in the presence of people who could teach it to me, right? So there were some serious multifamily investors who had their own education programs who became mentors and friends to me, and I learned from them. I learned from Jack Canfield and Chicken Soup for the Soul education and philosophies. I learned from Oren Klaff, if you read any of Oren Klaff's negotiating techniques. Tali Sharrett, the science, what the heck's the name of her book? Linguistic Programming, or The Science of the Mind, or The Power of Persuasion. There's so much literature that is out there. I personally feel that you can learn 75, 80% of that from education and reading. But that other 25 or 30%, which I believe is the true magic, it's through repetition and practice and failure and success in the marketplace, number one. And then number two, I also believe that it's a skill set that is brought from generations of input. And again, I'll go back to the fire department again, Brian. When I have to negotiate with a sick person to get to the hospital, I better have a few takeaway clauses. I better have a few, features and benefits. I better have some skills, man. It's not just my medical training. It's also my ability to understand another human being's needs, to be able to fulfill those needs and move the ball down the field. So a lot of that negotiation. Look, I've negotiated gangbangers, out of the bushes so they don't shoot me or somebody else. You know what I mean? I've seen some stuff. I've lived a little bit of a few lives. So as silly as that sounds in this context, it really isn't. It's fundamental. And then understanding what a true emergency is and what isn't. If I don't get the deal, I don't get the deal. promise you there's another one right around the corner. So that's called attached detachment. I'm attached to the outcome, but I'm detached in the process. Because if I feel needy in any negotiation, the negotiation's already lost. So you got to spend more than 20 minutes with me to get all the answers to that one for sure.
Let's talk about how long it took you to be able to leave your job as being a fireman to ramping up the buying and fixing and flipping process to then becoming, being on TV with your show.
It took about 8 to 12 months for it to be too expensive to go to the fire department, which was a blessing. So there were a few things that happened that were critical, instrumental to that journey. One of which was once you go to an education class, a Whitney class or whatever, you end up in that funnel system, right? You're getting emails from all over the place about all kinds of shiny new ways to make money in real estate. And I followed one gentleman, and this was back in the day when they were selling websites to investors, your money site, your buy site, your sell site. And this guy was a firefighter out in Los Angeles. And I approached him afterwards. I'm the new guy on the block. I'm the student. He's the big guru guy. Oh, he's a firefighter. I'm a firefighter. We're going to fall in love. I know he's going to love me. Anyway, his presentation was very disjointed. He did that hour and a half presentation and then buy something at the end. And I just went up to him afterwards and I just said to him, "Hey, buddy, I'm a firefighter. You're a firefighter." I said, "Your comedy sucks, dude. You're not funny. You're laughing at your own punchline before you tell the joke, blah, blah, blah. I'm just BSing with the guy." And he looks at me and he says, "Who are you?" I go, "Dave, I'm a firefighter." And I tell a little story. And I said, I used to do a little stand-up comedy stuff in London back in the day. I'm just giving you my love. You know what I mean? I'm loving you. And he says to me, "You're my new comedy coach." He says, "I'm flying you down to Orlando. I have a 4-day class and I want you to coach me." I'm like, "What?" He says, "Come on down." And I thought he was, busting my chops. He says, "I'll pay you $1,500 and I'll fly you down, put you up in the hotel for the 3 nights and just critique my comedy, critique my presentation." And I'm like, "Oh my Lord." I said, $1,500 in my head. I'm going like this. I was earning $200 for an overtime. And this guy's going to give me $1,500. And I showed up at this event and I got to see the other side of the coin in the education space. I got to see a lot of bad people do a lot of bad things. And I also got to see a lot of good people doing good things. And I was able to align myself with some good people. And one of them was Russell Brunson. Russell Brunson had a company called ClickFunnels. It's one of the marketing gurus out there with Gary V and all that stuff, Gary Vaynerchuk. And they were kind of like all on the periphery of the group that I was around back then. And Russell Brunson sent me an application via an email. He said, "This company's starting a new TV show." He said, "You're a funny son of a gun." I'm still on the fire department at that time. He said, "You're a funny son of a gun." He said, "You should apply for this thing." And that's what I did. I loaded an application with profanity because I knew I had to separate myself from everybody else. I needed to slap them, right? Tony Robbins calls it a conscious interruption. You got to slap the consciousness, however you want to do that, right? You got to wake people up. So I tried that technique. It worked. They called me. I told him not. I hung up the phone on him. I said, "I told you not to call me." You know what I mean? Like I'm playing the game. And they came out and they shot a little demo. Next thing you know, instead of watching the reality TV shows, I'm making the reality TV shows. Instead of watching Home and Garden TV, I'm in Home and Garden TV. Instead of watching the Today Show, I'm on the Today Show. Instead of watching, Becky Quick and Kiernan there, I'm sitting in the studio with Becky Quick and Kiernan and the rest of them on Squawk Box. And I'm like, how the heck did this happen? But that, was the trajectory that moved things forward to where we are today. You begin to garner a reputation, garner the status of expert, which is what we're all shooting for.
What was your reputation? I mean, obviously you're very entertaining and that's what got you in the door. But what did all those people and on those shows that you just mentioned, why did they want you to come there? Like what was the information they wanted you to share with them? They
wanted the entertainer first, to be frank, right? They wanted the entertainer first. And I always talk about the guy on the show as a third party. Otherwise, it's very egotistical, right? Me, myself, and I, the great I am. I hate that. I really do hate that. EGO, ego stands for ease God out. So I try and talk about that dude in the third person, but they primarily wanted a show. It's a reality TV show, and I can perform. I could do that. But I was blessed with a partner who was very detail oriented, Pete, and we would put fantastic products through the episode of the TV show. I mean, we would take legitimately old houses like you have in the Midwest. You know, we've got 150, 125-year-old homes that need love and attention. And we would take that ugly duckling, we'd make it super sexy, and we put it on the market, and we kept our numbers real. We kept our numbers real. It's not like, I made 50 grand in 2 days on this deal. That silliness that you see in other parts of the country and other shows. I mean, that's just feeding off of people's ignorance. But, that's why they wanted us. They wanted us because we could entertain, but we also had a fantastic product from ugly duckling to beautiful home. And then, they even got to meet the buyers on the back end. We got to do some great stuff. They bombed our marathon up here in Boston, and we got to do an episode around helping some of the victims and the folks who suffered, losing limbs during the Boston Marathon. So we got to do great works along the way. So it was a cool run. It was definitely a cool run and a good story to tell.
When you look back on that period of being on TV and having your show, how has it helped propel you to where you are now? I mean, has it helped? Has it hindered you? How do you view that?
No, it has helped. And I can even give you a today example of that. It's Monday now. I don't know when the show's going to air, but it's Monday today for you and I, having a chat. And then Thursday night, I'm flying to Heathrow in London from Boston. I'm going to drive up to the Midlands in England, and I'm going to be the keynote speaker at a large real estate convention in the middle of the UK, because it's that guy from the TV show that can headline and, speak. And, that allows, the doors were opened because of that. The doors that most people would just keep on banging on, looking for an opportunity. The TV show blessed me in the sense that I could open doors. I'm speaking in New York in April at a contractors, connections, and commercial events, right? It's a couple of bucks for speaking, be up front, be the, I don't say the center of attention, but be a focus of the event. And therefore you can garner relationships. Ready? Full circle. It's about the people that you know and how you treat them that makes you successful in this business. It's not just your knowledge base. So that's what it did. It really opened the doors to being the perceived expert.
Where are you now? Because in the intro, we talked about the $350 million fund that you are managing. What exactly are you doing?
After COVID, we were in a hard money lending business, and COVID damaged that significantly. How about we use our stuff, right? So it was a case of a pivot. What's next on the horizon? And through my years of speaking and networking in environments of that nature, I met some pretty substantial guys, and one of which was a gentleman by the name of Walter Novicki down in Fort Myers, Florida. And Walter and I got on the phone, and it's like, what do you see next? A couple of old war horses at that point, right, in our late 50s. And he said, I've been doing syndicated repositionings and ground up development work in Southwest Florida. He said, why don't we raise capital and do it on a bigger scale? And that's where it expanded to where it is today. So, we'll do ground up construction. We'll bring in investor capital. So again, we could talk for hours just on investment structures like this, but think of the money down to buy a piece of real estate or develop a project, usually 20%. That 20%, we will raise that money from our investors under what's called an LP, limited partner, GP, general partner structure. And then we'll get that money together. Let's say it's a $5 million raise. We'll put in 10, 20% of that. Investors put in the rest. We put the money down. And then we get the bank loan. We qualify for the loans, and we'll build the structures, or we'll reposition the existing multifamily assets. And in return for us doing all of that work, the investors are given on average 70% of the profits. So they'll get 70% of the cash flow once it's stabilized. They'll get 70% of the profits on the back end when we either refinance or exit out of the investment, sell the property. And the investors have an expectation based on the way that we do our deals of anywhere from a 2.5 to a 3 equity multiple, meaning an investor will put up 100,000 at the end of the investment, cash flow plus profits. They'll get another 200,000 back on their money. So that's a 3 equity multiple. And if you look at that compared to how they're doing in the stock market or how they're doing in the, in a savings account, it's why alternative investments in commercial real estate attract the very, very best individuals with a nice high knowledge base. They understand what's going on. So that's where we're at today, man. We're in the dirt. We're building stuff. We're repositioning stuff, and it's pretty good.
Down in Florida, is that what area are you doing this in?
So we're in Fort Myers, Cape Coral. We've got some dirt in Rotunda. We've got another project on McGregor Boulevard in Fort Myers. So we're all in the I-41 corridor that runs up and down the west coast of Florida. That's where we focus our attention. We'll look in the Carolinas. We'll look in Texas. There are other markets that are beginning to pop again. So we'll pull the trigger there as well when it makes sense.
Tell our listeners how they can find out more about you, get a hold of you, like whatever information you'd like to share.
So you can go to freedomventureinvestments.com, freedomventureinvestments.com. You can go old school and call my office, 781-922-4418, 781-922-4418. Or just Google my name. You can find me on LinkedIn. Is always a great place to connect. Dave Seymour on LinkedIn. There's a chat feature there as well. We can get to know each other. And if we can help in any way, we're happy to do so.
Dave, what's your favorite hack or app?
So I never, ever thought I would say this, but I'm beginning to really like the AI technology. So we do quite a bit of marketing and informational stuff using an AI bot. And my team has been trying to fine-tune this Dave Seymour AI bot, which is really cool and really freaky all at the same time. But the big, just for a little giggle on the way out, the biggest challenge is that this AI bot is having the toughest time with my accent because it's London, West Virginia, New York, and Boston. And it's all shook up together. And this bot doesn't know whether I'm from South Africa, New Zealand, Australia, or London. So the accent is kind of bizarre. But that being said, as it gets better and better, it really reduces the workload on training and educating and informing people through that video format that we're all using today. So yeah, the AI technology is pretty wild, man. You can also upload any PPM, private placement memorandum, into our AI underwriter, and it will immediately spit out the good, the bad, and the ugly on an investment opportunity. So a lot of stuff getting streamlined these days. So I like AI.
You're using ChatGPT or all the different AI?
All of them. My guys do it. all. It's like, don't let me near it. I'll break it. Whatever it is. I broke the internet twice last week. So
it's been real fun talking with you. And I love your story. I mean, going from being a firefighter to, getting into the fix and flips after the Great Reset or during the Great Recession, your negotiation tactics. I'm really glad you shared those with us, and your success on TV and what you're doing now with your large fund and the ground up development you're doing in Florida. I really appreciate you coming on the show, and thanks for being here today.
God bless. Thank you.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. And remember to save the date for the Midwest Real Estate Investor Conference on April 24th and 25th of 2025 in Grand Grand Rapids, Michigan. It's going to be an event you won't want to miss, packed with invaluable sessions and opportunities to connect with like-minded investors. Keep listening for more updates, and we look forward to seeing you there. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.